Welcome to Buy, Hold, Sell. Today we're talking about cheap large caps, and to help me talk about this topic I've got John Ayoub from Wilson Asset Management and Daniel Moore from Investors Mutual. Daniel, let's start with you. Computershare, buy, hold or sell?
It's a sell for us. It's a good quality business, but if you look at a number of their businesses, whether it's corporate registry, corporate actions or mortgage servicing, falling interest rates are bad for all those businesses. And if you look at the outlook for those divisions over the next 3 years, it's hard to see any earnings growth.
Okay, it's on a really low PE, little bit of yield, buy, hold or sell?
It's a hold for me for very similar reasons to Daniel, but I think they've been very cost disciplined and they've still got some time to run their cost out program, so it saves them for the time being.
Okay, BHP Billiton, it's been a great time for the miners. Iron ore at high levels, they've been paying out some dividends, still trading a bit less than the market, buy, hold or sell?
But we all know what they do. For me, it's a buy. I think global stimulus will come back in a big way, given the turmoil that we're facing. On 12 times, great yield, it's a buy.
Okay, BHP, Daniel, you've got a view?
Totally different. We're a sell. If you look at base metals, nearly all base metals have fallen, with trade wars. Iron ore's been, pretty stubborn. It's held up around $90. We definitely think there's downside. We think that's an unsustainably high price, and that's 50% of their profits. So we see supply increasing in the short term as Brazil comes back onto the market, and medium term from other geographies.
Okay. Brambles, global logistics, it's been under pressure. It's looking pretty cheap, but it's faced a number of headwinds. Buy, hold or sell?
It's a hold for us. It's a good quality business. They've got strong market positions in nearly every geography, but the valuation is a bit toppy for us. It's above 20 times. We'd love to buy it a bit cheaper.
Okay. Brambles, buy, hold or sell, John?
It's a buy for me. Buyback in place, supporting the share price. Operationally, things are improving. A lot of the cost headwinds are abating. If they can sort out a couple of the contractual issues with the key customers that the market's concerned about, I think a re-rating's on the cards.
Okay, it's a buy. Origin Energy, it's been cheap and had a few issues for a while. It's been a bit of one that people have been saying this could be a turnaround story. Buy, hold or sell?
It's a hold. I can't see a catalyst right now. It's got a great free cash flow yield of 10%, good defensive attributes, but I can't see what's going to re-rate it now, so it's a hold.
Okay, have you got a buy, hold or sell on Origin?
We're the same, we're a hold as well. The energy markets business has quite a good flexible power generation portfolio, which is good in a new renewables world. And the APLNG business is producing really good cash right now, but we have some concerns in the medium term about LNG pricing, so it's a hold.
Okay, last one for today, the big four banks. NAB, it's had a good year, up 24% or so. Buy, hold or sell?
We're underweight banks, but NAB's our preferred, so it's a buy for us. We're quite excited about the new CEO that's going to come in, Ross McEwan. Got a great reputation from RBS, and they've taken their medicine on the dividend, so they've cut that dividend. It's still around 6% yield, and they've got $1 billion of cost out that are going to come out over the next 2 to 3 years.
Interesting. John, is NAB going to make the cut for you?
Look, it's a hold. It is the best of the banks for us as well. But we struggle to see banks re-rating given the benign credit growth, margin pressure, and look, we'll await Ross McEwan's strategy to emerge before we go to buy on that one.
Okay. Well, just because they're cheap doesn't mean they're a buy. If things are looking cheap, it's usually for a reason.